To pass the pro firm evaluations every single time, all you need is a good trading system that works and a good risk management system that works. So in this video, I'm going to show you the exact step-by-step trading strategy that my students and I have been using in the last few years to pass the pro firm evaluations. And I'm going to break down my risk management system as well that I have used not only to pass my Forex fund evaluation, but also to pass FTMO challenges, funding talent challenges, the funded trader program challenges over the last 3 years. And I'm also going to talk about some very important points that you always need to consider when doing these pro firm evaluations, because no matter how good your trading strategy is, how good your risk management is, if you are not following these steps, not keeping these points in mind, then there is a big chance that you will not pass your evaluation anytime. So make sure that you watch this video until the end so you do not miss any important information. And if you are new to the channel, hit the subscribe button and turn on the notification bell as well. So let's get into this video. Now first I am gonna give you a trading strategy to master if you are looking to pass pro firm evaluations. Then I'm gonna give you a risk management system. Then I'm gonna talk about very important 3 points that you always need to keep in mind when you are doing the pro firm evaluations. So my trading strategy is very simple. You can choose whatever time frame you want to. You can choose any pair you want to. This strategy is applicable to Forex, stocks, crypto, indices and commodities. The very first thing that we need to do is to find a strong support and resistance area. Now, what is a strong support and resistance area? If the market is getting a rejection from some point over and over again, whether to the downside or whether to the upside, if we are getting a rejection over and over again, that is our support and resistance area. From where the market will bounce to the upside, that will be considered our support, and from where the market will bounce to the downside, that is considered to be our resistance. Now a good support and resistance is when the market keeps getting rejecting at that area again and again. That area becomes very valuable because we can again expect a reaction from that area in the future if the market will come back to that area to retest it. So here we can see that there are so many support and resistance area. This is a resistance. Market acted as a resistance here. We came back to retest that level again, rejected from here and market went down. There is this support level here as well. We acted as a support here. Then the buyers made a strong movement to the upside. We have a resistance here. Now when we are creating this resistance, look how the sellers are making a movement to the downside. The last time when we made this resistance, look at the sellers movement. We came back to retest this level. Now look at this seller's movement. So the important thing that we need to keep in mind is that when market makes a big seller's movement like we have here and we create a resistance, there is a chance that when the market will come back to retest that level, the market will not drop. I have literally seen it happen over and over and over again over the last 4-5 years. And that is the reason why market did not make a strong movement to the downside and we did not even came to that level from where this support level was created and buyers started to make a movement. So we are not going to be using these type of resistance areas or a support area from where these type of movements happen, like the big impulsive movement. So from here when we created this higher high, look how the sellers are going to the downside. That is what we need. So we have our resistance now here that we can expect a reaction from this area, but it is a very new resistance and we need first at least 2 rejections from this area. If there are 2 rejections, then and only then we will be considering this for the 3rd rejection. So from here, the sellers made a movement. We ended up creating a support level here, which we can see there is this support level. We have this resistance level. So now let's see what is going to happen. Market literally came back to this area again. And when we came back to this area, we have again got a rejection. So it's our 2nd rejection of the resistance. And the sellers, they started to go to the downside. And we came back right towards that area from where we have previously made this support level. So we have this support level that has been getting a rejection again and again, and we already have 3 rejections. Now when we have this rejection, which is our 3rd one, I said that if the previously market makes a strong movement, like here we can see how well the market made a big movement to the upside after getting a rejection, then we are not going to consider that because there is a chance that we will simply just go to the downside. We will break it like we did here. There was this big resistance area. Sellers made a strong movement, but look what happened. When market came to that area to retest it, we retested it, we rejected it, but afterwards market ended up breaking this area to create a new resistance or a higher high, which is here. So definitely we are not gonna consider this spot if we want to buy. We need a different type of a movement like the one we are having here. This resistance area becomes very promising because look how every time when the market gets a rejection, how we are making a movement to the sellers. It's definitely a proper movement, like the sellers going down, buyers coming up, sellers going down, buyers coming up. So that is something we need to consider. Now we have two rejections. The first one is right here. The second rejection is right here. So what we are gonna need, we need the buyers to make a movement to this level again, but we need the market to make a proper movement. And the proper movement is there should be some buyers then sellers, some buyers then sellers. So if we look closely, we can see there were some buyers. We made this small resistance area, sellers showed up, and then we made a movement to the upside again exactly at this area from where there was two rejections already, and we got a third rejection. Now the moment we are getting a rejection, the third one from this resistance area, we are not gonna take the trade randomly at this area. We need confluences. And what will be the confluence? If we need something to be considered as a sell, we need a lower low, a lower high, then a lower low, a lower high, then a lower low. This is a proper seller's movement. So if you're gonna take a sell trade, then we at least need either a lower low or a lower high. It is always preferred that take the entry from the lower high area because it is definitely a higher price to sell. We always need to sell high and buy low. Now while looking at this area, when we got a third rejection, now sellers have made a movement from here to here. When we have made a movement, we retested this very little resistance. Now that is a good thing for us because we literally retested this resistance right here as well before continuing our movement to the downside. Now when we retested that level, look at the price action here, and when we retested this level, look at the price action here. It's literally the same. Even though this resistance, it was a big resistance inside the overall support and resistance range here, this small resistance was bigger than this one. However, market did not make a movement to the upside even though we were getting a rejection. And the price action here, it is similar to this one. We came to this resistance, we retested it, buyers tried to go up, we ended up failing. We have created a lower high here and the sellers have started to make a movement. So anywhere we place our trade, when the market was creating a lower high, put our stops above this rejection, the third rejection, which is a resistance, and our target at the support area will be a good trade opportunity for us because we are getting a rejection from this area as well. So this was around 2.5 risk to reward ratio trade. Now it's a trading strategy. You can master any trading strategy you want. The main problem, it comes in a risk management. If you do not have a proper risk management system, then there is a big chance that you will not be able to pass the pro firm evaluation. So let me show you my risk management system, and it's very simple. I have been using it over the last 3 years to pass these pro firm evaluations. Now my risk management system that I use to pass the pro firm evaluation is called asymmetric compounding, and it's a very simple concept. The concept is that on the first trade, if you are risking 1%, which I recommend you to risk only 1% in your first trade, and your target is 2.5% from that trade, meaning 1:2.5 risk reward, then at the end of your first trade you are up 2.5% profits already. Now what you're gonna do in your second trade, it is very important that you increase your stop loss from 1% to 2.5%. So the second trade will be that you need to risk 2.5% and your target will be 6.25%, which will be again 1:2.5 risk reward. Now if you're gonna use my asymmetric compounding concept, then it's gonna be only 2 consecutive winning trades that you need to pass the 8% profit target objective of my Forex fund or of the funded trader program or of any prop firm. You only need 2 consecutive winning trades. It's not a rocket science to get 2 consecutive winning trades. It's super easy. You get 30 days to complete the phase 1 of the evaluation, and in these 30 days you are only looking to take 2 trades that meets every single criteria of your trading strategy. And if you can have 2 consecutive winning trades, then you're gonna be easily making more than 8% profit target to complete the phase 1 of the evaluation, which is a difficult part because passing the phase 1 is difficult as you only get 30 days to make 8%. Phase 2 is a little bit easy. You get 60 days to only make 5% profit target. So if you can have 2 consecutive winning trades, then you're easily gonna pass the evaluation no matter which prop firm you're choosing. Now there are some problems, there are some things that you need to keep in mind when you will be doing these challenges. Now you have a good trading strategy, you have a good risk management system. You know how your trading strategy works, you know when to enter, from where to enter, when not to enter, from where you need to close your trades, and you are using asymmetric compounding. But the problem is that most traders, when they start taking the challenges, they do these three important mistakes. The first one is that they rush out the process. They think that as you get 30 days to pass the prop firm evaluation, they start thinking that they need to complete the phase 1 of the evaluation in a shortest period of time possible. But that is not a good thing, because at the end, if you are trying to pass the evaluation in a short period of time possible, you are trying to pass the evaluation as quickly as you can, then in the end you are gonna lose your challenge, because you will end up either over risking, over trading, or over leveraging, and that will make you lose your challenge, and as a result you will end up losing your amount that you have spent to take the challenge. The second very important mistake that these traders make is they don't hold on to their winners. If your strategy is telling you that the trade opportunity has a chance to be a large winner, then hold on to it and maximize the profits from it. I literally shared inside my recent video on how my student made over $179,000 profit from one trade because he held on to his trade, and he ended up literally making over 21 rewards from just one trade. He only risked around 1.5%, but he made over $136,000 in one single trade on his $400,000 funded account. So if you can hold on to your winners, that can be an absolute game changer, because the larger the winner, then the fewer trades you need to take in order to pass the evaluation. The third mistake that most traders make is over trading, and it happens because of you try to rush out the process. So if you can stop over trading and you limit yourself to a maximum number of 2 or 3 trades per week, then it can help you control your emotions, it can help you psychologically, and it can help you to not over risk. So these are some very important 3 steps that you must keep in mind if you are doing the prop firm evaluation. And I can guarantee, if you have a good trading strategy, if you have a good risk management system, and you follow my 3 advice, then it's gonna be super easy to complete prop firm evaluation, whether you are taking My Forex Fund Challenge, whether you are taking FTMO challenge, the Funded Trader Program challenge, or Forex prop firm challenge, or any other prop firm evaluation that you want to do. And if you want me to help you pass the evaluations, you can join my mentorship program, you can join my traders community from the link in description. Let me know in the comment section if you guys have got any value out of this video, and let me know on what topic you want me to make a video in the future. I will see you in the next video. Thank you for watching. Bye for now. Peace out.